Hello, I'm Jeff Holden with SMB Capital. Today we're here talking with one of our traders about a market play that they made. Alex, I'm excited to do this playbook with you. If you could introduce yourself really quickly, and then we'll go from there.
My name's Alex Leiser. I'm a senior intern at SMB. I've been at SMB for 3 months now. This is going to be my first market play trade that I'm doing a playbook on, so I'm excited to get into it and just keep expanding on this play.
Yeah, and we were just talking before this, this is such an interesting play because once you have a framework for it, then there are really a lot of opportunities that you can find, whether directly, kind of correlated as we were talking about, whether it's in this case Qs, or if you're finding alternative vehicles. It looks like in this playbook we use shop as your alternative vehicle. That's a great example of taking a base idea and expanding it and making it fit something that you're comfortable with. So I'm really excited about this playbook and can't wait to get into it.
Getting into the trade strategy, what we're looking for is an elevated VIX that leads to momentum-based trades to trade macro ideas and scalp high beta names. It usually has some fundamental news overall behind the overall market, making names like SPY, QQQ, and high beta names in play.
Let's stop real quick and let's define high beta.
So high beta names are just going to be names that they're trading at high premiums because like growth stocks, they trade at very high premiums compared to normal stocks. So, when high beta names can really make big moves all around, they just are kind of going to be more in play and going to move around a little bit more. And there's always going to be news factoring in that's going to, cause them to have outsized moves.
That's a good broad representation. So specifically high beta, stocks have a beta and it's usually pegged to an index. So maybe shop is pegged to Qs. Maybe shop has a 4 beta. So for every dollar Qs moves up, shop's going to move up 4. Maybe it's, a 20 beta. Each of these stocks have different values. And so we really need to be specific with how we're defining high beta because, and what we mean by high beta, because to Alex's point, what you're looking for is stocks that are going to use the movement in the market and then have a magnified amount of movement. So you're trying to put yourself in the best risk-reward position, specifically focused on the reward portion in this by using the core instrument that you choose. And some people say, I trade Tesla really well, or they say I trade Amazon really well. I just have a feel for it. What you probably do is actually trade the underlying dynamics that are going on in the market well, and then you express that trade idea through that trading vehicle. So there are specific quantitative strategies that you can use using the underlying and then expanding it from there. And we'll talk about those later in the playbook. But that's something that's really important to understand is what high beta is and what it means specifically to you.
No, that was great. That was really great. Since the fundamental news behind the overall market is making names like SPYs and Q and high beta names in play, like we said, and then since the fundamental news is breaking, the risk reward for your basket of in play names is phenomenal. So if you can really catch that move short or long as that news is breaking and the move is coming in, you can just get really phenomenal risk reward on your basket. So for this play, I wanted to build a thesis plus play in my playbook. Plus I wanted to see the turn in the tape, fight for a low risk entry, and then that's how I get a good trade. So I built a thesis that high beta names were going to be vulnerable if the QQQ and SPY sold off on a negative Fed catalyst from the FOMC meeting or minutes. I built my basket of top relative weak momentum names, and when the news broke and the QQQ lost its AVWAP from the start of the FOMC, I shorted shop as my vehicle to play the QQQ's downside.
This is my favorite thing about this trade right now, is you took a core concept, which is I'm going to trade a high beta name, and then you added a check mark in your favor. It's not I'm going to trade a high beta name, and if we go down, I'm going to short whatever. It's I'm going to take a high beta name, then I'm going to find the relative weakness in out of that basket, and I'm going to focus on the one that I believe could move the most with the best risk reward in the favor of my trade. So that extra layer, and it's not a lot of work to just go through your list and filter it down into one, maybe two or three really, really important things. But if you can do that, you've probably magnified your reward maybe 1.5 to 2 times without increasing your risk significantly.
Yeah, and over time, that's really going to add up. Okay, so then let's talk about the tape. So the indicators that you're going to be looking for this type of trade are when the news breaks, you want QQQ and SPY holding above or below key AVWAP levels from the announcement. So let's say the meeting starts at 2 p.m., a lot of volume starts coming in, you anchor a VWAP off there, and then you can kind of tell if we're holding above that there's a lot of demand from the news. If we're holding below that, and you really see that turn, maybe you can tell if sellers are in control. I'm looking at an elevated VIX. In this case, we're elevating over 22. I want to see elevated RVOL. I want to see tick reading confirmation to confirm my thesis. I'm looking at ADD confirmation, and then I want to look at big bids and offers in the level 2 to confirm my thesis. All these things together can just kind of help confirm your thesis more overall.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Here's a big picture. This is a chart of the NASDAQ composite stocks above their 200-day moving average. To the left, you can see that we're still at 29.45%. That's something I really wanted to note because I felt like we really rallied in the general indexes in March. So the fact that the number of composite stocks still above their 200 days under 30% is still that. I think that's a pretty big tell on the big picture. Also, big picture wise, we have a hawkish Fed that is unwinding a balance sheet and raising rates to fight inflation. The FOMC meeting was looked at as a bearish catalyst with the Fed speeding up balance sheet unwind. The QQQ is still under its 200-day moving average. We have interest rate risk. We have asset deflation. We have geopolitical tensions with the Ukraine and Russia. We have a VIX that's over 20. And then we also have a general market that rallied, like I said, in March from an oversold position, but the breadth still remained weak to me. And that's something I really wanted to pay attention to. And then the big catalyst that came out from the FOMC minutes meeting was from April 6th, was that the Federal Reserve signaled that it would reduce its massive bond holdings at the maximum pace of $95 billion a month, further tightening credit across the economy as the central bank raises interest rates to cool the hottest inflation in 4 decades. So I thought that was a big catalyst to note. So then for this trade, some reasons to sell. So reasons that I would take profits would be if my profit target was reached. Let's say I have like a whole number and it's reached, then I'll take my momentum size off. Breaking news on the market that was not there before I started the trade. Sellers cannot keep the QQQ under key AVWAP level. Maybe we trade down, but they just can't keep it under, so I take profits. I'm seeing an unusual buyer step into the tape. Maybe that could cause me to take profits. And then if the QQQ cannot hold under a new range and build, that could be a signaling you to take profits. Some reasons to sell: risk reduction. If buyers recapture the AVWAP on QQQ and I'm stopped out for a loss, if I move my stop to break even after AVWAP was lost and scratch after stock regains and builds above. And then again, same reason, if you see an unusual buyer in the tape, sometimes maybe it's okay just to step out before your stop is hit. Okay, so then going over the intraday fundamentals on SHOP. SHOP has a 52-week range from 510 to 1762. It has an ATR of 52.39. The average volume was 3.12 million shares. The beta for this name was 1.62. Institutional ownership 71.8%. The market cap was 75.94 billion. RVOL on this day was 1.7. The short float was 3%, 3.08%. And then the shares in this float are 113.549 million. And then something I wanted to notice too is that SHOP has rallied less than other momentum type market names, showing relative weakness in the name compared to other market names. So like we talked about, the general market had a decent rally in March, and the fact that Shopify was still not above its 50-day was just kind of signaling to me that this name is, more vulnerable than the other names that had rallied above their 50 and rallied back above their other key moving averages. Looking at the QQQ, it's kind of hard to see, but I have this range marked from 351 to 357. That was the key range that I was watching going into the FOMC meeting. I wanted to see if we could break this range to the upside or downside and hold once they started talking. And that was like the main range I was watching on a larger term time frame. And then here's a larger term time frame picture of SHOP. I just have it pictured how I chose SHOP as my market leading vehicle for this basket to play the weakness in the QQQ on 4-6. It could still not clear the 50-day moving average, like I said, like other market names did in the March rally, showing me that it had relative weakness and was very vulnerable to a market sell-off. And then, just highlighting again that it's still under that thin blue line, the 50-day. And then here's how I executed this trade. So I was watching both, obviously watching tape on Qs and SHOP when the announcement came out, but I was mainly watching Qs because I knew that the Qs were going to be the main driver with the high beta names. So, just walking through this trade, I highlighted, walking through it to really start at 2 p.m. That is when the meeting started and volume started to come in. So that is where I anchored my VWAP to see if buyers or sellers were in control. We traded up to the top of the range, and then I highlighted 1. That is when the Qs lose their VWAP, and I'm seeing that turn really come in the tape as the news of the balance sheet unwind, of speeding up of the balance sheet unwind comes out. I can really see that come into the tape, and I can see us lose VWAP. So 1 is where I'm shorting SHOP. I'm using Qs as a level to manage the risk. If the Qs start closing back above that AVWAP, I'm going to close my position out, and that's the level that I can manage my risk against. And then if you look at 2, that is where I'm taking the momentum size off when QQQ cannot build below that low of range. So it pops below, but then it instantly starts popping back above, and you can see volume starts to come back in, and I could see the change in the tape. So I'm taking my momentum size off at 2. At 3, I'm taking 66% of my runners off as QQQ builds its first higher low and higher high. And I can also see the volume picks up, a sign that we cannot build at new lows. And then at 4, you have to be flat by here. I'm flattening out above the FOMC start AVWAP as buyers take control. You have to be very open-minded. Even though I was very bearish, I'm flat there and then ready to look to see if I get another opportunity. So that's the technical analysis of the Qs. And then going into my trade management, I have 1 highlighted. This is where I shorted SHOP at 559 when the Qs lost their AVWAP. My max paid stop was risking 663, so I could keep this relatively tight with a 4-point stop. As soon as we started to really push off on volume under these levels, I was able to backstop my profits and, at least guarantee a break even. I highlighted 2. That's when we were coming into my first target, and the Qs at that time could not build below the previous new low of the range. So that's where I took off my momentum size 2. At 3, that's where I took off 66% of my runners. And then into 4, that is where I flattened out the position and looked for the next trade. And then something I wanted to highlight too that I've been noticing a lot since coming to SMB when I'm tracking all my trades, especially in this higher volatility market, is that my best trades, I don't really need to draw down at all. Like Shark says, I can go kind of sniper mode, really time my entries up right, and then not really need to draw down. And that's just something I really wanted to point out because for me, that's how I'm going to keep getting better.
Let's talk about that really quickly. So that point of you've found for your best trading, you really don't need to draw down. Okay, that's fine. What do you need to do in order to not draw down?
So when I'm not drawing down, it's because I've set the trade up right. And don't get me wrong, you're still going to draw down on your losses. But my worst trades are going to be the ones that, I'm giving it more room and more room and more room. And I'm letting it draw me down, where my best trades in this market have been spots that if I'm wrong, I'm not going to let it draw me down much at all. And I'm going to move on. And that's just a theme that I've been noticing.
You've let the trade almost start versus anticipating the trade's going to be there.
Yeah, no, that's also another great point to add. And then for reading the tape, this is something that really frustrates me, but I recorded the wrong screen when I was doing the tape, and then I got tape from Dan, and his tape it was 30 minutes after the trade. So it didn't work. So I don't have tape for this trade, and it's really embarrassing, frustrating. But I'm gonna make sure that for the rest of my playbooks I have tape. But yeah, I recorded the wrong screen, so I don't have any tape. So I definitely get a 0 for that.
I was going to give you some points because of something else, but if you want to get a 0, you can get a 0.
No, I definitely don't want a 0, but
We can talk about it because I would agree that when you've set the trade, go back to the prior slide, actually 2 slides back, there's something about the tape in shop that you could look at. The reality is you've set this trade up so well that you're not really, it's tough to say, but the reality, I believe, is you're making this as a Q's trade and you're using a leveraged vehicle in shop. So what you really need to be aware of is what was happening in the Q's. And you were. You talked about, it kind of ran up. It barely got green from the open. It's not really holding up, and then you saw the selling on the tape. So, you're not reading the tape in shop, and I think we really need to respect when we have to read the tape in the individual name that we're executing on, and when using the Qs as a market vehicle, using the Qs as a trade idea, and then executing that through a market vehicle like shop is actually a very valid trade strategy. Now, if you were doing this on a tape that wasn't in play, say Q's was not in play on the day, or it wasn't really moving much, there was no, VIX is below 20, volume wasn't there, we didn't have a news catalyst, and you said, I'm going to trade shop because Q's is moving, that's not really a valid trade idea. But because you're using shop as just a vehicle, it's similar to saying I'm going to make an options trade. They're probably really highly correlated at this point and on this trade. So you can kind of get away with this in this special circumstance. And I think on the desk, we love special circumstances because if you've done the work to understand what you're trying to do, if you've done the work to understand how to control your risk in that trade, and then you've recognized an opportunity to, without adding any risk, magnify your potential reward, you're doing a lot very right. So I think that those are 3 things that really are important to respect in this trade, and the focus really should be on Qs, and then you're just using shop as a vehicle. So I think you should get some points for reading the tape because of the Qs. So don't beat yourself up too much. This is a really good trade idea that sometimes you really just need to understand which tape you need to be paying attention to. And in this case, I really believe it's the Qs.
Yeah, that was the tape I was watching too. Like, because if you look at 2 on this chart, when I was watching the tape, we traded below the range, but I could see the tape flip right away, and we traded right back up, and it just wasn't weak, and that was just a huge tell to take the momentum off.
And so that's where I think that's the tape you need to put in there, is the Qs tape, honestly.
Totally. I had the Qs in shop. I just recorded the wrong screen.
Yeah, that's fine. So I would put it in there after this, and maybe we can update that, because I do think that is, if you're making a trade off of Qs, you need to be watching Qs.
Totally. Great point. Yeah. Okay. What did I learn from this trade, and how could I have done better? How would you trade this differently for the next trade? I learned that playing market names that have relative weakness or strength can give phenomenal levels to work off of during macro events. Catching a basket of well-picked names can pay huge in a risk-first way. And then something I want to work on is next time I would like to work with my team so I can use technology to help guide me on how I'm going to structure my basket versus just choosing shop as my vehicle.
Yep. I have a couple challenges here, and we can talk about them very freely, I think. Technology is increasingly becoming a bigger part of what we do on our desk, and you've laid out an idea that's a good core idea. Mm-hmm. It's an idea that requires some, it's an idea that is a good core idea. It's an idea that you can make probably 3 times better, maybe 4 times better by using technology. You picked shop, and I think you laid out the right reasons for that. without the technology supporting your idea, we don't really know if SHOP was the best vehicle to trade. And you really do want to come in and know what the best vehicle to trade is. So you want to have the technology to understand what actually is really high beta relative for the last 10 days. What actually is relatively weak in the last 10 days. And we have the tools and the resources to be able to do that. And I love the fact that you said, this is how I would do it, this is where I would go with it. But that's not really enough right now. You actually have to follow through on that and create a high beta filter or create some sort of list that's going to generate some ideas for you. That would be taking this and helping it be much better than it was. Stock selection, I thought, 9 out of 10 off of the base criteria. Really good ideas. Without the technology, I don't think it's that great. But I do think you laid out really good arguments. And these are the type of arguments I would hear when I started on the desk. This should do this because of this. That's fine, but we have the skills now and the technology to not have to say, this probably should do this because of this. We can actually test it and know, is this going to do this because of this? What is the beta of SHOP? That would have been really nice to see. What is the relative weakness of SHOP over the last 3 days? Is it down 3% when everything else is up 2%? Things like that are really important because they can leverage up your trade when done right. You're still controlling your risk in the same way, but we're just finding the highest way to leverage your trade and stack the odds.
Like build a formula more so.
Exactly. And there's a little finesse in there, but we don't need it to be all finesse. We don't have to rely on our intuition here. We can actually do a better job of that. Yeah. So, any questions about that?
No, I think that's spot on. You just need to build a formula so I'm not making it any harder than it already has to be.
That's exactly it. You've done all the work to identify a great trade. Now you want to get paid as much as you possibly can by putting on the right amount of risk and controlling your risk in the best way possible. So you really want to go back and work with your team and leverage up the technology we have. I'm happy to sit there and talk with you or share what I've done. But there are probably better people that you can work with on our desk to do this. But I do think if you like this trade and you like this idea, this is something you have to take forward because you can leverage up your trade so much without increasing your risk at all. If you can set the factors the right way and then use technology to support your trade decision or the vehicle that you're trading.
I totally agree.
So we've got stock selection 9 out of 10, big picture 9 out of 10, trade strategy 10 out of 10. Love the fact that you waited for the break of anchored VWAP and then use this as a vehicle to trade it. I thought that was one of the best trade strategies I've seen in a long time. Again, stock selection we have to get to, or technology we have to use in the future, but the base trade strategy, using something that's relevant for that time, which is anchored VWAP, using everything else, those are really good things to do. So I thought that was great. Intraday fundamentals, would have loved to see a little more intraday price action analysis. Was SHOP holding below VWAP most of the day when Qs was holding above? Was SHOP trading above average? Like little things like that can make a big difference. So we had 9 out of 10, 9 out of 10, 10 out of 10, 8 out of 10. Technical analysis, you got 10 out of 10. I thought that was very good. Reading the tape, I gave you a 5 out of 10 because you were kind of looking at the information in the right way, but you didn't have the tape of. If you pulled in the tape of Qs, that would be very good. Trade management, I thought was 9 out of 10. Your reasons to sell that you laid out earlier were amazing. The fact that you allowed the shift in Qs to be a reason to sell as well, that was really, really good. So 9 out of 10 on trade management. Technology, yeah, come on, man. 0 out of 10. This is where I think this is your biggest growth opportunity. And I'm really excited to kind of see what you can do here. And I'm excited for when we're trading live, you to be able to have a filter or an alert or something that will help you understand exactly where your real edge is in this trade. Review 9 out of 10. Diligence of presentation, 8 out of 10. So overall, I thought you did really well. Again, like there's an area that I think we can get better at. Overall, I gave you a 75 out of 100. The two areas that would honestly take you really high up would be reading the tape and technology. If you could nail those two things, like you're talking if you just did reading the tape on cues and technology, you'd be above a 90 in like a heartbeat. So, you really want to be at above 90 for all these. So I think you're close. But without the technology supporting this trade idea, this is just too vague for us to do as professional traders.
No, I completely agree.
I would do that. And, like I said, I think the thing I love is the trade idea is amazing. The thing I don't like is we kind of made a vague statement and we use some indicators, but we have the potential of doing so much more. And that's what I'd like to see.
This is such a new play to me, so I'm just happy that I can keep building off this, and I'm really going to focus on that technology. It's new to me, and I just really want to get better at that.
Awesome. Well, I'm excited to do another playbook with you in the future on this, and for you to have those two areas like cleaned up a little bit, because I think when we see the growth, that's really where the opportunity comes from.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.